Ladies and gentlemen, good day and welcome to the Union Bank of India earnings conference call for the period September 30th, 2025. The bank is represented by the Managing Director and CEO, Shri Ashish Pandey, Executive Directors, Shri Nitesh Ranjan, Shri Rama Subramanian S., Shri Sanjay Rudra, and other members of the top management. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Now I hand over the call to Mr. Ajay Bansal, Deputy General Manager. Thank you, and over to you, sir.
Thanks, madam. Good afternoon, ladies and gentlemen. I, Ajay Bansal, Head of Investor Relations, welcome you all for the Union Bank of India earnings Concall for the period ended September 30th, 2025. The structure of Concall shall include a brief opening statement by respected MD and CEO, sir, and then the floor will be open for interaction. Before getting into the Concall, I will read out the usual disclaimer statement. I would like to submit that certain statements that may be discussed during the investor interaction may be forward-looking statements based on the current expectations. These statements involve a number of risks, uncertainty, and other factors that cause the actual result to differ from the statement. Investors are therefore requested to check this information independently before making any investment or other decisions. With this, I now request our respected MD and CEO, sir, for his opening remarks. Thank you, and over to you, sir.
Thank you so much for this. Good afternoon to everyone. I extend a warm welcome and sincere thanks to all of you for joining us today for this investor call and list presentation. Actually, your continued interest and trust and engagement with Union Bank of India is truly appreciated. So before moving to, we have already uploaded the presentation in our website and also as per the required regulation to the NSE, BSE stock exchanges. So I'm very sure it is available to all of you. But in brief, I would like to just give you the macroeconomic environment in which the banking industry is working upon. So the first is, as we know, there is a bit of global economic conditions, a bit sort of uncertainty, maybe evolving trade dynamics, tariff-related developments, or maybe related to the oil or geopolitical situations, etc. But then, if we see on the domestic front, the key macroeconomic indicators are well supported by the policy interventions by the Government of India as well as on the monetary policy from the regulator. So I think the total outlook is very optimistic. And if we see externally the IMF data, the GDP growth is projected around say 6.7 to 6.8% range. One of the fastest, the developing economies across the world, and then driven by government capital spending on infrastructure and rural India. Similarly, our projection as far as the bank is concerned and is around 6.7%. That is, it is actually higher than the last year, our real GDP expectation of 6.5. So that is again good. With this background, at the same time, I appreciate and acknowledge our customers, that is their lineage with us and the vintage which the bank enjoys with the customers across the country. And I believe that is the core values of the bank and the staff members who are there to support the sourcing, the servicing of the customers. So here I would say the bank performance, the strategic focus remains as pursuing sustainable growth and real calibrated balance between top line expansion as well as bottom line strength. So while the bank is working upon the business side, the growth in the business, but at the same time, the bottom line is be alertly considered. With this, the key financial highlights in this background, I would say the net profit for Q2 FY26 stood at 4,249 crore, making a QoQ increase of 3.25%. For the first half of FY26, the net profit reached 8,365 crores. The OP, if we take, is for only quarter 2 26, it is 6,814 crore, and for the first half is total 13,723 crores. The profitability ratios, ROA is comfortably at 1.16. The return on equity stood at 15.08. The capital adequacy is one of the best in the industry at 17.07, with CET1 ratio at 14.37 percentage points. Similarly, there is an improvement in the asset quality, which is an important parameter for any of the bank in the industry. The gross NPA reduced by 107 bps YOY to 3.29%. The net NPA declined by 43 bps YOY to 0.55 percentage points. The PCR stood at 95.13, reflecting a well-provisioned balance sheet of the bank. The credit cost and slippages, again reflecting the asset quality of the bank. The credit cost stood at 22 bps for quarter 2 FY26, which was 109 bps in quarter 2 FY25. The slippage ratio was contained at 0.91 in quarter 2 FY26 compared to 2.40 in Q2 FY25, that is Q2Q. The gross slippages for half year 26 stood at 4,496 crores. The recoveries of half year FY26 stood at 6,284 crores, and during the first half of 26, gross recovery has surpassed the gross slippages by rupees 1,800 crores. I think this is a very important parameter, so that is the reason I have covered in the opening remarks. While NIM was maintained at 2.67%, the net interest income registered there is a degrowth, but then the non-interest income had a robust growth of 11.37%. Coming to the business growth and strategic priorities, so we have actually cautiously curtailed high-cost bulk deposit mobilization, so around 21.85 YOY in September 25. So there is a reduction in that, and that is actually giving a sort of a good support while we say we are cautious about the NIMs or maintaining margins. So total deposit, that is the reason, has grew by 1.9% YOY, and advances registers the 5% almost growth, precisely 4.99 YOY basis. While we say that we have shelled out the bulk deposit, yes, because of the cautious being the maintaining margins, but the retail term deposits plus CASA grew by 1,03,000 crores YOY basis. The retail lending growth is around 23.98. The MSME lending growth is 14.88 for the period. So strategic mix, there are two important things. One is the retail to bulk deposit, which is 75-25. So we are striving for that, and the RAM to corporate lending at 55:45. So in the same way, when we say RAM 55, we tend to increase it to 58% going forward, so that the portfolio is diversified and there is a better retail, because when retail comes, it comes along with the CASA and the other cross-selling, the ancillary business, the other benefits. So while the corporate credit, similarly, wherever, why I am saying that it is from 45 we would like to reduce, because there are certain STLs which are below benchmarks. So probably that actually we are shifting from lower to higher yielding while maintaining the same asset quality. So with this, I conclude to my opening remarks, and the entire senior management team of the bank is with you post the result, and you can have the question and answer session with us, please.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jay Prakash Mundra from ICICI Securities. Please go ahead.
Yeah, hi, Ashish sir. Good afternoon and thanks for the opportunity. So first, congratulations on your new assignment here at Union Bank. Sir, I wanted to check if you have had time to review the bank's portfolio, to provide some insights about the bank's growth trajectory. Union Bank has been behind the system loan growth for 1-2 quarters, if not more. If you can diagnose, we have charted a trajectory wherein we are focusing more on profitability, but sacrificing loan growth, maybe corporate loan growth. So where are we? And how soon can we reach system level growth? That is my question number one, sir.
Yeah, I think if you see the team before even I have taken charge has worked well on the entire issues. So though if we see that the growth is muted somewhere, I will agree with that on the deposit, but then it is very clear in the opening remarks that almost 21.85 of the bulk deposit we have cautiously shelled out. So it was a basically trade-off between the margins and the profitability and the business, and the team has done well. Now coming to the going forward, so let me share with you that on the basis of CASA, the team which we are looking at to increase by 1.5 percentage points somewhere going forward, and coupled with the retail term deposit rather than the bulk deposit. So we'd like to maintain the CD ratio of between 78.5 to 80% levels, and we have analyzed the book as well whenever we speak of the large corporate book or a mid corporate or MSME or retail agriculture. So on the all side, that is the retail agriculture RAM. So that is the reason we are saying that we would like to move from 55 to 58% around, so going forward. And also on the large corporate or the corporate, the private spending, certainly. So we are having the concrete plans with us. So fine, the past 6 months it was a bit sort of a muted growth, but going forward, you will see on both we would, as we are cautious about the margins, will continue and defend and continue for that sort of a NIM. And also we will like to, the growth, if we say the GDP is around moving around 6.7 to 6.8, so certainly we would like to have around 9 to 10% of the growth on both the asset and liability side. So we have that aspiration and will continue for moving towards that as we go forward from quarter to quarter.
Sir, I wanted to check by when Union Bank can be similar to system loan growth. If you have had the opportunity to review the bank's portfolio and strategic priorities. Of course, there is a trade-off as of now between growth and margins, but if you can provide some insights as to by when Union Bank can be similar to system loan growth.
See, going forward, you will see that the system level will be at par with the industry. But now, since past 6 months has gone, what I am saying is on a cumulative basis. So going forward, you will see that we will be like, the system level which growth is there, you will see the similar in bank. So we have gone actually in the opening remarks and also when the reply to your queries, that to a granular level, that when we are saying about the sustainable growth, from which sectors it is going to come, that is what we have gone. But on a broader basis, what you are seeking, so quarter to quarter, we will be moving with the same as in the industry. So only we were saying cumulative basis for March 26.
Okay. So just to clarify, sir, you are saying that right now we are 6% loan growth, system is 11. By March 2026, you would be able to catch up with system, or every quarter you will be growing more or less similar with system on a QOQ basis, and hence the conversions will happen at some point of time.
Very true.
I'm sorry, I could.
Very true. Second one. Very true. Very true. As you said, but we are aspiring even better than system level for quarter to quarter here onwards.
Okay. Understood. Okay. So the March 26, what was that number? So you said by March 26, every quarter you will be similar or higher than system, and the convergence may happen as and when it comes, right? There is no hard and fast deadline for March 26.
No.
Or you think by March 26 you can become like 10-12%, 11-12% loan growth bank?
I would say, because if you take, that is why I used that annual cumulative basis. If you take, then it would require a much higher growth, to build that, to maintain the 11 to 12% for the whole year. But here onwards, you will see the system level growth which is happening in the bank also. That is will be going ahead. But we are aspiring better than that, so that it is not converging as usual, but we would like to expedite its convergence a bit earlier.
Sir, he's talking about the sequential growth Q on Q, and gradually we will try to achieve the year on year also.
Right. Understood. Thank you. And secondly, sir, on your cost of deposit and yield on advances, it looks like there is a high mismatch, in the sense that your strategy says that you are cutting down bulk, but your cost of deposit is only down 5 basis points, which is the lowest. It was even higher in Q1. You are saying that we are focusing on RAM, but your yield on advances has gone down 16 basis points quarter on quarter. So somehow what your strategies and the actual numbers are very different.
Yeah, actually, as you said, I think you have said perfectly. So, when I said that strategy, and if you see that 21.85 bulk deposit we have shelled off or reduced, see, it doesn't happen in the month of, say, July. It would have happened in the month of something, in the month of August and September. Impact is yet to come. So generally, whenever you adopt any strategy, so I think you will see at least that 21.85, the full impact you will see in this quarter, point number one. Point number two, when we have taken a strategy and, shifting from bulk deposit to the CASA as well as to retail term deposit, then again it will continue to some quarters till it is a, balancing between the book. Now coming to the loan book, there are two things. One is the loan book. I am saying on the asset side, deployment side of the fund. So one is on the treasury side, another is on the loan book side. So then similarly, loan book, you will see there are certain portions which are at very low yielding. That is why you are seeing that is steep. There is a reduction in the yield of advances. And the second is, if you take a yield on funds also, which is from the treasury side. So again, we have a plan to move a certain portion from the treasury to the loan book. So certainly the yield which is there in treasury and the yield which is there in the advances side has a good difference, and that is why we are very much confident that our NIM will be protected, and we will be trying to take it forward from here, keeping in view what the scenario emerges as far as the repo is concerned.
Understood, sir. And last question, sir, is on provisioning. So there is a 880 crores of standard assets provisioning, and I think in the BSC notes to account it says some 130 crores of prudent provisioning. If you can elaborate a bit more here, is this ECL provisioning? Is this SMA provisioning? What is the nature of this standard assets provisioning?
Yeah, the notes to accounts which I'm mentioning, the 133 crores there, this is Avinash Prabhu.
is to do on a 6-monthly basis, because last year also, if you recollect, we had taken some standardized provisioning. As far as the 800 crores that you're referring to, yes, we have taken some standardized provisioning on two counts. One is also moving towards, reducing further the impact of ECL. And two is on some names we felt that it is prudential to take some provisions at this stage on a conservative basis. So that's the reason why you see provision for standard assets in this quarter.
Understood, sir. Thank you. I'll come back in the future.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. We'll take the next question from the line of Mahrukh Adajania from Nuvama. Please go ahead.
Yeah, hello, sir. Congratulations on your appointment. So, I have a couple of questions. My first question is on the upgradation. So, there is a bulky upgrade this quarter. Is it from any lumpy account, and is there a provisioning reversal associated with it? That was my first question, sir, and then I have a few more questions.
Good afternoon, ma'am. There is one account upgradation has happened. That's a reasonably sizable amount. Remaining is the overall upgradation that has happened in small ticket, but overall recovery, we are almost in line with the guidance.
Okay, but could you quantify the amount of the account?
It's close to 600 crores.
Okay, and an equal amount of provisioning would have been reversed?
Yes, that's right.
Yeah.
Okay. So that is the reversal in the provisioning. All right. And sir, could you at all quantify how much is the recovery interest in the total interest income, like you always do? Is there anything more or less compared to the previous quarter?
It's in line. Similar trend is being maintained.
Sorry?
A similar trend as it was happening in the previous quarters.
Yeah, Mahrukh, this is in line with the previous quarter. So, roughly it's about 400 to 500 crores every quarter. So that's the number in this quarter as well.
Got it. Makes sense. And just my last question, probably Jay also asked that. So a lot of banks are seeing 20-30% deposit repricing benefit every quarter. But for you, the deposit repricing benefit is lower in Q2 also compared to Q1. So will there be an acceleration in the second half? Is that the way your deposits are structured, or do we assume that bulk of the repricing is already over?
Yeah, see, that is I think the first, Mr. Jayaprakash, which he had a similar thing, query on that. So the deposit which you are asking, which we have done 21.85 shelled off. So basically, it is spread over from July to September. Moreover, in August and September, its full impact is yet to come. So that's the reason you are seeing that our cost of deposit, the reduction is not that much, but yield on advances, the reduction is a bit steep. So I think that was the reason. Now you will see more impact, and it will be more sort of wherever we will be reducing the bulk deposit.
But sir, I said I will add to that. Actually, if you see the absolute number on the interest and deposit, it has come down by 430 crore. So slightly there is a denominator effect also, because we have not taken a additional deposit. In deposit has come down. That is why you are finding only 3 basis point reduction in or 6 basis point reduction in cost of deposit, but actually it is slightly more.
Got it. And sir, if at all you can quantify anything or give us any color on the transition to ECL. I know it's a draft right now, but any impact on the back or the existing book, but more importantly, any rough estimate on what the run rate of credit cost will be post implementation of ECL? Because that's important, right? You will have a bigger SME book and that will have stage 2, that will need stage 2 provisions. So what will be the run rate of credit cost post ECL implementation?
Yeah. So ECL is not new. In fact, we have been doing ECL calculation for last almost 1.5 years. Every half year we have been reporting to RBI also. We have also seen impact of new guidelines, and it is little bit of changes are there compared to what we have been doing. In terms of system capability and all other things, it is already in place. Numbers, we are aware of the numbers, and numbers are not very significant. And if you look at the draft guideline, it allows us to spread this impact in next 5 years. But we are in a position to spread the impact in much lower number of years, so that we will take a call. And this is the draft guideline, so we have not disclosed a number as such, but numbers we have been calculating on regular basis, and we have been making plans to take additional provision as and when required.
Got it. But just in terms of run rate, so say if ECL was already on right now, would your credit cost for the quarter be substantially different?
Yeah, it is almost at similar level, not substantially different.
Okay, sir. Thank you. Thanks a lot.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. Going forward, my first question was...
Mr. Doshi, I'm sorry to interrupt you. Your audio is low, sir. Can you please use your handset to ask questions?
Is it better now?
Hello. Sir, it's low. Please increase the volume a little bit.
Yeah, is it better?
Give me a moment, please. Yes, please proceed now.
Yeah, thanks for the opportunity. So, if you can elaborate on the NIM, so we are at 2.67% now. So, how do you see it go from Q3 onwards? With already, the rate cut must have been passed on. So, by year end, what kind of improvement we are expecting?
See, there is I think 9 basis point decrease on the sequential basis in the NIM. But if you observe from March to June quarter and June to September quarter, the sequential decline is now coming down. And if you recall, we had also guided that given the 100 basis point rate cut, maybe up to September quarter, there will be decline in the NIM. And post that, perhaps we should be able to recover. So at this stage, if you assume that there is no further rate cut, then perhaps we are close to the bottom, and maybe Q3 onwards, we will be able to see the NIM kind of remaining stable to improving.
The impact of the CRR, rate cut will also start, playing out because that has started towards the end of September. So you see the NIM gradually increasing, so kind of stabilizing in the December quarter, and then improving further. This is of course subject to no further cuts from the RBI, rate cuts from the RBI. We'll obviously have to reevaluate, the numbers if in case there is a rate cut.
Okay. And my second question is regarding the PSLC. So I think this year we won't be having any PSLC income, but will it come back from next year onwards, or it will not?
So, this year we have not done the PSLC sale, but as of now, we are meeting the priority sector targets and sub-targets. And the objective is to build on good buffer so that maybe towards the third or fourth quarter of this year, or maybe definitely the next year, we should be able to have sufficient buffer in the priority sector to kind of gain from the PSLC sale.
Okay, so from next year onwards, something can come. Maybe not at the magnitude what we used to do.
Yes. I think whatever we have done in the last financial year, at least that kind of quantum would be possible from the next year.
Okay, that's it from my side as of now. Thank you.
Thank you. The next question is from the line of Ashlesh Sonjay from Kotak Securities. Please go ahead.
Hi team, good afternoon. A few questions from my side. Firstly, I missed your response to the question around creation of standard asset provisions. So if you can elaborate the reason for adding those provisions further in this quarter as well. Secondly, if you can elaborate on the composition of the incremental loan growth that you intend to build, whether retail, agri, MSME, what is the expected growth in those segments? And if you can also share for us to understand the trajectory of cost of deposits better, if you can share what was the cost of term deposits this quarter and last quarter.
Yeah. So actually, what is the thing is that, normally you can understand that standard asset provisioning we used to do, the accounts are still standard and doing very well also. But because of certain regulatory guidelines and prudent measures, like last time also we done it, this time also we have been doing it on a very conservative basis. We have already done this is on a continuous basis. After watching the account performance, again, we may take a call on that. But presently we feel that it can be, these accounts, we can make a standard account provisioning, which has been done on that. The second one.
Yeah, and actually this will also help us, in terms of building up, towards ECL. So that's the reasoning behind, taking that provision in the current quarter.
And the next question here?
On the loan growth composition that you expect going forward.
Question, as MD sir has in the opening remark also told that presently because of the margin pressure, we will be more towards on the RAM sector, which will be going now, it is around 57, we will be even crossing 58, 59. If at all, if a corporate sector, if there is a good asset at a good pricing comes, certainly we are there to take that.
Understood, sir. Sir, and lastly, if you can share the cost of term deposits this quarter and previous quarter for us to understand the trend over there.
Cost of deposit, yeah. See the cost of deposits, cost of term deposits separately.
Yeah, separately I think we have to provide, we will communicate to you one-to-one basis.
That is not available.
Okay, sir. Thank you. I'll come back in the queue if I have more questions.
Yes.
Thank you. The next question is from the line of Sushil Choksey from Indus Equity Advisors. Please go ahead.
Sir, congratulations on your appointment and good luck for the years to come. Sir, your rich experience, be it Union Bank for over 2 decades, Bank of Maharashtra along with your ex-colleagues and current colleagues at, how would you re-energize the bank from a perspective which is the most key essential part is deposit franchisee and the touch points of all the Unionites and the Union Bank future business where RAM is concerned or corporate is concerned?
Yes, I think a very valid point at the very valid time you have raised this. So thank you for your best wishes. Now there are 2 things which you have raised. One is on the energizing, maybe on the staff side, soft side of the organization, and the another one which you have raised is on the deposit franchisee, which the bank typically have and with touch points. So on the first, let me share with you, because in my entire career of banking that has seen certainly these 2 banks, but then the others also in being in industry for so long. I always believed that the Unionites, which is the staff of the Union Bank, which is around 78,000, are really one of the best in the industry. The second one I have seen, why I am saying this, whether on the skill set or the patience or the resilience and comeback and responsive to I would say the demand of the time. I would not say any corporate call or I would not say any specific, but then the way in which for ages now you must be seeing we will be very soon celebrating 107th Foundation Day. So this is what my tenure is not that long, 107, but then the history says that the staff of the bank are really wonderful, and that is the reason if you see in the month of October as well, and even in September. So I think they have done, the growth is muted only because of, the cautious decision of shelving out the high cost deposit of 21.85 crores, percentage points. And similarly, there is certain portfolio which is moved from low yielding advances, that is short term loans, to slightly better ones. So I think the team which I have seen from the day one, and my earlier also for me, since you have asked that side that I'm basically from this bank and I am back to the bank. So for me it is like, the homecoming, it is Micah for, any lady like that. So I do feel that it is a strength and asset for the bank of this staff. And coming to the deposit franchise, yes, there are certain pockets which are actually the good yielding the deposit base for the bank, and that is the reason that if we see the last 3 to 6 months, though the 21.85% of the bulk deposit is reduced, but then the CASA as well as the retail term deposit has replaced it well. So it is not like, as such any degrowth or some substantial reduction, but the bank has poised. So I am very sure that going forward, you will see, the first query when Mr. Mundra, Jai Prakash Mundra ji asked on the business growth. So he was very, very keen in detail on the first half and the second half, and we all as a team have replied to it. So I think both the points which you have taken is going to certainly yield as a system level growth in this bank also, and you will see, because the things are very much in place, and IT is one of the things which enables the bank. So in IT also you must be seeing the bank is many gained advantage when the bank is getting so many awards and acknowledgements across industry. And the only thing is that we are going to capitalize it hugely on the customer service and staff ease of doing business. So certainly anything which culminates into business is all these things only.
Doubts on the rich experience led by you along with Nitish Ranjan, Mr. Rudra and Ram Subramaniam cumulatively for the top management team to drive the entire bank to a betterment. Knowing the bank from listing day in the capital markets, the vibrant visibility and how viable franchise compared to peers where you go, that is the only question which I was asking on a accelerated basis. You have answered most of my questions when Jai and Maruk have questioned you. I'm happy to hear all the positivities. Let's look for betterment. Congratulations and best wishes.
Thank you. Thank you.
Thank you. The next question is from the line of CA Dr. Ashok Ajmera from Ajcon Global. Please go ahead.
Thanks for giving this opportunity to me. And Ashish sir, very rich compliments and congratulations to you, sir, for having come back to Union Bank as the MD and CEO. And basically most of these questions have already been answered in the detailed discussion right from Jai to Sushil. But I would also emphasize on that only, sir, your rich experience of this bank as well as the wonders which you have done in Bank of Maharashtra. Now, looking at our condition today, what we were 6 quarters back in this bank, we are only 3% or 4% for last 6 quarter growth if you take. Right from Q1 of 25 of 21 lakh 8,000 crore business to 22 lakh 9,000 crore. That is only 4.8% in last 6 quarters. So sir, now with you having come back to Union Bank and now as the MD and CEO, do we expect that in your tenure of 3 years, we will be a 31-32 lakh crore business bank? Number one, which you already shared that accelerated growth. But to be more specific, for reaching this kind of growth again to the system growth of 12, 14%, 13, 14%, we will have to look at not only retail, sir, which is already 23% growing. This thing MSME is also reasonably. I think the time has come when we'll have to start with mid corporate and large corporate also to accelerate this credit. And I want to hear your plans for that to overall, how do we increase the total credit growth? Because for the bank to remain in good profits, ultimately the credit is the main business of the bank. Before the line got disconnected, how far you have listened to me, but I think I was on that our business and credit growth and looking at you. What do we expect now? How do we go about it, sir?
Yeah, am I audible now?
Yes, sir. Yes, sir. You are audible, sir. Ashish, sir. Yeah.
Okay. Thank you. Thank you so much for your the compliments and wishes. So let me tell you, coming to the bank, see, there are important thing, to when you think of a business at a system level or maybe better than system level. See, 2-3 things are very much required. The one is the people, another is the technology, and third is the required structures. So I am very, confident and happy to share that these 3 things are already there, as there was a question from Mr. Sushilji and the earlier the officials. So this structure is already in there, so the base is ready. Now coming to the third point, that when Mr. Mundra and Madam Mahrukh, they asked about the growth. So we clearly told that the system level growth and at least better than that we are aspiring. So certainly we will go by it and we are going for that. Now coming to the strategy or maybe the past experiences as you have pointed out. So I believe that yes, the bank has already discussed, I think last 20-25 days. Internally we have done the root cause, you say, or maybe a top-down approach, maybe a bottom-up approach, all sort of, because we had a field conference also for almost 2 days, wherein all our regional offices, zonal offices, verticals, we all have discussed about the same. So I believe everything is in place and we are going to do it, but then specifically, as you said, what would be the key differentiators? So certainly we are working upon, some of the products which can be niche for the bank. The second one is that we are poised for our foundation day, which is going to be held soon. And we are again thinking of, launching some of the digital initiatives. And in that one will be like, related to the mobile banking for business people. So like that, some versions of products related to the CASA. So these are the things. And then fourth is, most importantly, you can have product, but then a strategy to implement. So internally, last 20 days, the thought process which has evolved is back to basics. And the core to implementation, core to execution. So certainly we will be having the geography level thought process strategy, and then whether it is in retail, which sector, which specific area, which geography, which part of a salaried people. So already that is almost final. As you said, for 3 years. So I am not going to the figures which you have said, but yes, that we are working upon a document right now. We are taking 2-3 months time, and 1 year, 3 year, 5 year, along with our subsidiaries, along with our joint ventures, we are building the strategy document, which will be the rolling one, which will be like, the reviewed and mid-course correction taken every quarter or every half year. So certainly the bank is poised with a lot of positivity going forward, and I am very sure that you will see the same sort of, as you said, which was some 6 to 8 quarters before. So I think it will be in the same range and maybe better than that. This is, I think, we expect on those lines.
Thanks for such a reassuring statement, sir. Sir, my second one is some color on the treasury, because the treasuries generally are under pressure in every bank because of the rate movements. But still, in our case, in the other income, our treasury profit has gone down to 192 crore from 961 crore in the last quarter. Similarly, there is a depreciation also, which has also gone up by almost about 450 crores, 642 from 192 crores. So going forward, how do we see the treasury movement, like apart from the changes due to the rates? Now, since the better time will be there in this second half for the treasury with further 125 basis rate cut expected, can you give some light? Can you throw some light on the treasury going forward for the income as well as the income which comes in the other incomes?
Abhijit here. So as you have mentioned that, it all depends upon what kind of regulator gives the comfort to us. But as if we have seen that, last, what, RBI has said, in the last MPC also, there is always lookouts. So, there is always a scope that there would be a expectation of rate cuts, that we are also believing in that. So, these things are there. See, the CRR cuts, the fully CRR cuts benefit will be available in the current month and this quarter. So these are the good aspects which will be improving the liquidity in the system. And also, what we feel that the public spending will also improve in the current quarter, which will also improve the liquidity in the system. So putting all this put together, we feel that there would be a good market condition in the current quarter, in the coming quarter. So the interest rate is benign, so there is no issue on the interest rate. So I think there would be a better quarter coming in this December and March. So the profit that we have shown now, so may not be, the profit that we have seen last quarter, June being there, is a OMO and switch option, whereupon we have got a very good income. But the level of profits will maintain from another 2 quarters.
Sir, there is a lot of opportunities in the IPOs and the equity also nowadays. I think you must be making some good money on that also, Pathak sir.
Sir. So we are actually putting up in most of the IPOs where we feel that this company is going to do well, and we can get a good listing gain in this company. So we are there, sir.
Sir, one question on the specific question on some data, that other operating expenses in this quarter has gone up by 342 crores from 2743 to 3085. I couldn't find time to get into details. So what could be this 342 crore extra in the other operating expenses, sir?
Hey, Jayji, I think, if you just look at it on a full year basis, right, our total operating expenses last year were about 26,000 crores. And if you look at, just extrapolate the 6 months total operating expenses on a full year basis, you see that the increase is only about 5.5%. So it is in line with the trend. It is just that there were, the expenses booked in the second half of last year were on the higher side as compared to the first half. So I think we're trending in line with our plans. So therefore we're comfortable in terms of where the operating expenses are currently panning out.
Okay, sir. Point well taken, sir. If I'm permitted, can I ask something on this? Our zero SMA numbers, which have gone up substantially from the last quarter, is there any specific region or they have been regularized on time? Because there is not much pressure on the SMA 1 and 2 as compared to the last quarter, except the SMA 0. So, is there any particular region or particular account which was off for a few days?
No, these are getting regularized so it's not a matter for concern. We are very comfortable on that number. Yes, there has been an increase in the current quarter, but it's under control.
All right, sir. Thank you very much, sir, and all the best to you. And we'll see the bank again reaching to the past glories. Thank you.
Thank you. Thank you so much.
Thank you. Ladies and gentlemen, due to time constraint, we will take one last question for today, which is from the line of Rakesh Kumar from Valentis Advisors. Please go ahead.
Hello.
Yes, sir. Please proceed with your question.
Yeah, thank you, sir. And congratulations on the appointment. So just one question, and related to that also there is one question. So just on this investment depreciation reversal that we have, so has it come from HTM book?
It's from a trading book.
So no, number is quite sizable, so that is what I was thinking.
This includes the gains that we had from NSDL. As you're aware, we had a holding there.
Okay. Okay. And in the HTM book, like there is a drop in the duration. So have we sold anything from there apart from NSDL? Or
no. So HTM we have not sold anything. So that is paid mostly. It is because of the one stock that we have sold. Some part we have sold. So there is no much selling, maybe because of the redemption that might have happened in between.
Okay. The duration change is quite sizable in such a large book. So it was a bit puzzling. I was not able to understand.
Still there was some redemption.
Okay. And the SAR price in this risk-weighted asset, is it coming from the credit risk weight or market risk weight?
It is coming from credit risk.
Credit risk weight. Okay. So, like in which book, like in which what kind of portfolio that we have added which led to such a SAR price as compared to credit growth number on a sequential basis, sir?
Some of the entities which are otherwise rated, but for our own exposure, those are not rated. In rating list, it is not disclosed. So at those places, we need to treat it unrated, and that's right.
Okay. Got it. Thank you, sir. Thank you so much, and all the best.
Thank you. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
So thank you, madam, and thanks to all the officials of the investor community. Thanks for being with us and posing the queries you have. But then this is as per the ritual. After the board, we had a press meet and we uploaded the result and we had an investor meet. But then going forward, there will be a lot of engagement with each one of you. We will have physical one-to-one meetings, and as we move forward, and the thing which we have assured and discussed with you today, and we do have certain plans, and here also when we are talking to you, the entire senior management team of the bank is sitting. So we already had a discussion and we are moving to our strategy document. We will be finalizing maybe in the next 2 months' time, but then the implementation is already in the stages. So you will be seeing going forward, the industry level sort of the growth and maybe a better sort of, and going forward, since we are very cautious. And actually, if you see, as I said, 107th Foundation Day we will be celebrating on 11th of November. So typically this bank has been a conservative side on the expenditure side also, as far as the concern other than business, and the second one is on the margin side. So we'll continue on the both side, and going forward you will see much contained the cost to income and the other parameters. And certainly the bank is poised and the team is poised for a good growth, and we will be requiring your help and support. And certainly we will have more engagement with you. Thanks to you, for all of you, for being connected to us for this investor meet and this presentation. Thank you so much.
Thank you, members of the management. On behalf of Union Bank of India, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.